Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about some key stocks you need to be watching during this time. And if you look at this watch list here, you will see some good old-fashioned cheap prices. For example, Microsoft, 244, lowest since, not counting June, lowest since May 2021. All right. Next we got another cheap stock, Visa. We've actually talked about Visa on the Wealth Squad Instagram and how it's in this pattern here where it's looking like it's going to bounce back off and continue in this trend. So we can see the higher 200s, 210 around there pretty soon. But that's not the best deal on here. 3M I would consider to be a very, very good deal at this price. Same prices as the COVID depths. You can see March 2020, same price as it is right now. 3M at 114. Then we have Microsoft, like I said, 244. Google at 103. Google has not been this cheap since February 2021. Nike at 107. Bounce up a little bit, but right back to pre-COVID levels, down from 180. Home Depot at 280. This is a $300 stock, at least it should be. No reason to be under 300, so that'll be back soon. Intel is a interesting one. Finally broke this level after 4 years. You can see it's traded in this channel for 4 years, or 5 years actually, my bad. So 2017 to 2022, and you can see 68 to 43 for 5 years, and it finally broke. Now we're below 30, lowest price since February 2016. So you're looking at 6 years of price appreciation gone, and with what, a bad earnings report, and you can see it is very bad, down 58% from expectations, and earnings down 58, revenue down 14.6, when every other earnings report since then has been pretty good, right? Has been beyond expectations. That's why it's green here. Now we have an earnings report coming up on October 27th. That will be a big determination on whether Intel keeps going up or keeps going down or bounces right back up. And we'll see right here. Let's actually see this. Estimates for 35 cents a share. Last quarter was 29 cents a share, right? They expected 69 cents. So they're expecting 35 cents a share. Let's go back 4 quarters. Because with every business, it could be seasonal, right? We don't know unless we go back and see for ourselves. So we can see right here, estimated $1.11 as their income per share, and what was actually reported was $1.71. Now it is simply 35 cents. So you're looking at whatever that percentage is, whatever it is, it's a bad way to go. You're looking at least a fourth of what it once was, maybe a fifth, right? You're looking at a fifth of what it once was just a year ago. So it only makes sense for Intel stock to fall. However, you have to, as an investor, figure out the risk to reward and whether this upcoming earnings report or the earnings reports coming after that are going to be good and Intel will recover. Who knows? It's really a questionable game here because it's broken a 5-year channel, 5-year trend, and anything after that is just plain old scary. But considering Intel is a very old company and pays a significant dividend, it could be worth the risk. It's up to you. But yeah, this level is insane of all the years of all the technology that Intel has produced. Very interesting to see how this company will continue going forward. I am not too sure. Whoever could catch the bottom will be very handsomely rewarded. Let's just say that. Beyond that, we could look at Square. Square, of course, has been destroyed since around August 2021. That was the very peak. But this whole thing that lasted from December 2020 to almost December 2021. So it lasted a full year of Square in the 200s, or block now, I should say. But now it's in the 60s and no one really cares, right? They're just like looking at other stocks. Maybe time to pick it up, who knows? Besides that, I'm just really looking at the higher market cap stocks like 3M, although 3M's market cap compared to these other stocks is kind of small, but Microsoft, of course, Google, Nike, Intel, and then Meta, Facebook, lowest level since actually the Analytica scandal back in 2018. I can't remember the exact name of the company that had the scandal with Facebook. It was some type of data analytics company that did not do well for Facebook. And you can see in one day it fell, I believe it was 20%, and that just started this downfall. Recovered back up. COVID came, recovered. Oh, now it's worth $380. Nope. Joke's on you, 140. So we're back in the 140s. Facebook's future is questionable with TikTok taking over. It's like a contrarian play, just like Intel, right? You don't know how it's going to go going forward. It's very indifferent. So it's up to you as an investor to take that risk, measure that risk reward, potentially take that risk, and honestly, you just got to see for yourself where it goes. You could buy a couple of shares and wait, see if it goes down even lower, and buy a couple more, or you could just avoid it altogether, look elsewhere. That is up to you. Lastly, Nvidia, of course, one of the worst stocks that we have seen lately, just along with Meta, Facebook, 340 down to 130, where Facebook was 380 down to 140. So Nvidia is right along with Intel in regards to bad earnings. You can see here we're looking at 51 cents a share. You go back 4 quarters and it's $1.17. So earnings cut by 50%. Intel earnings cut by 75% or so. It's not looking good for semiconductor stocks. Let's just say that. Stocks in general have not been very good lately to us. Even Microsoft, once the biggest company in the world, believe it or not, they passed Apple for a little bit, down from 350 down 240, so down $110 on a $240 stock. That's something to note, right? That's a big fallout that you're shaving off of your investors. So it is up to you, as a CEO or the employees of the company, and try and make that back. Let's hope they do, right? Slow dividend. You're not investing in this company for the dividend. You're investing for the share appreciation and the internal growth within the company. Let's see if they can keep that going moving forward. If not, I'll happily buy this in the 200s. I'll happily buy most of these stocks if they fall even more. But if it recovers back up, which I don't necessarily, I could expect that to happen because we've been falling a lot lately. Let's check the actual index. Let's check the tech index. You can see, let's go back to the 3 months. Past 3 months, it's gone from 340 down to 290 just in the last 3 months. And this year alone is down. So down 13% since the peak in the last 3 months, and down from 400 now under 300, so down at least around 25% on the largest tech index in the world. It's tough out there, guys. If you haven't lost money this year, then you haven't been invested. That's as easy as that. Let's hope we can see some growth moving forward. That'll be good for all parties involved. However, if it does fall even more, better opportunities arise. It's a trade-off, but we will see, because we don't really dictate, right? We don't really dictate that trade-off. It's up to the market, Mr. Market, to make that trade. So let's see where it takes us. By the way, guys, just looking at these stocks here, a lot of these are solid, high-quality investments moving forward if you could get them at cheap prices. So add them to your watch list, wait, and make some money. I hope you enjoyed this video. Thank you for watching, and until next time.